Friends, welcome back. ಕೃಷ್ಣಾಷ್ಟಮಿ ಊಟ ಎಲ್ಲ ಆಗಿದೆ. ಕೃಷ್ಣಾಷ್ಟಮಿ ಅಂತ ಹೇಳಿದ ತಕ್ಷಣ ನೆನಪಾಗೋದು ಕೃಷ್ಣ ಅಷ್ಟೇ ಅಲ್ಲ, ಕೃಷ್ಣನ ಕೈಯಲ್ಲಿದ್ದದ್ದು ನೆನಪಾಗ್ತದೆ. ಯಾವುದದು? ಕೊಳಲು. ಕೊಳಲನ್ನ ಹಿಡಿದ ಕೃಷ್ಣನಿಗೆ ಏನಂತ ಕರೀತಾರೆ ಅಂದ್ರೆ ವೇಣುಗೋಪಾಲ ಅಂತ ಕರೀತಾರೆ ಅಲ್ವಾ? ಇವತ್ತು ರಾತ್ರಿ ಕೃಷ್ಣ ಹುಟ್ಟಿ ಬರಬೇಕು, ಆದ್ರೆ ವೇಣುಗೋಪಾಲ ಇವತ್ತು ಆಗಲೇ ಇಲ್ಲೇ ಇದ್ದಾರೆ. ಅವರೇ ಮುಂದಿನ ಸೆಷನ್ ಹ್ಯಾಂಡಲ್ ಮಾಡುವವರು. ಹಾಗಾಗಿ ತಡ ಮಾಡದೆ ವೇಣುಗೋಪಾಲರನ್ನ ವೇದಿಕೆಗೆ ಕರೀತಾ ಇದ್ದೇನೆ. ರಾಘವೇಂದ್ರ ಅವರು ವೇಣುಗೋಪಾಲರನ್ನ ವೇದಿಕೆಗೆ ಕರೆತರಬೇಕು ಮತ್ತು ಪುಷ್ಪ ಗುಚ್ಛವನ್ನ ಅರ್ಪಿಸಿ ಕೃಷ್ಣನಿಗೆ ವೇಣುಗೋಪಾಲನಿಗೆ ಅರ್ಪಿಸಬೇಕು ಅಂತ ಕೇಳಿಕೊಳ್ತೇನೆ. Friends, Venugopal is a different personality altogether. I requested him, sir, how can I introduce you differently today? He said, no sir, nothing. Just say this Venugopal is going to answer the session, that's enough. Not only today, in the earlier sessions also when I was asking him, similar kind of response I was getting. He was not keen to be introduced with the details. But I said, I am very much proud of you. I want you to introduce and talk something more about you. Friends, C.A. Venugopal has completed his chartered accountancy course in the year 2002. And he has also completed, he got 45th rank All India. And he has also completed DISA and CISA also. He has also got the certificate of forensic accounting and fraud detection course. And the areas of his interest is that he has had hands-on knowledge on the computer programming. He has designed and developed various mini applications systems, including online tax filing application, FileMyIT.in, and Sulabh Tax. So it's very rare to see a chartered accountant designing and developing a program which is used by many other chartered accountants. So he has conducted workshops on accounting standards in various corporates. He has got more than 13 years of practical experience as partner of Venu and Vinay. He has been in the areas of specialization in the internal audit of the large retail clients and management consultancy for the business analysis and the growth. He has design and experience in design and development of internal controls and process documentations. Friends, I am sure we have decided to put his session as the post-lunch session and the 2 hours long session after the lunch, because we are confident that he will keep every one of you very much engaged and also continuously make the whole session effective and useful to all of you. Ladies and gentlemen, what do you wait? Join me to welcome him.
Thank you, sir, for your kind introduction. And sorry if I disturb your sleep. That on a Sunday afternoon, you shouldn't curse me. Okay. So I'm less of a tax man, more of a controls man, and I look more from the technology perspective and controls, etc. The intention of today's discussion would be more, I'm sure the GST audit is around. You would need to understand the various aspects of the audit, reconciliations which is more required, and various areas where the technology is to be used or required to be used. In fact, the whole of the session, all the 3 points, you would be like, it wouldn't be a lateral communication of serially. All these 3 points you would be seeing in each of the slides. Before I move on to the session, I have some basic expectations about the audience, about the industry, and about the various stage we are with respect to the GST. Let me make that clear, and in case if my assumptions are wrong, you should correct me. I am presuming now we've completed 1 year journey, we have almost crossed 400 days. So we are fairly aware of the GST, both as a subject, concept, how it needs to be applied. We are fairly aware of the various product classifications which our clients are dealing with, or some of you are from industry, the classification which you are handling. So a fair assumption that the classification is clear, rate of tax is clear, the type of taxes to be charged are clear, what type of returns to be filed, what data to be filed in which return is also clear. Not that the subject is clear, we have also built an ecosystem around which how these transactions have to be handled. So the persons who will be handling GST is also set, the softwares which we will be using is also set, and how do we fetch, how do we fill the data, what to file is also done. More or less internal audit and stat audits have been passed through, so one round of review also happened. So I am making a fair assumption that it's not new anything about GST. We are aware, and maybe there are still some dicey areas where people have difference of opinion, some advanced rulings giving different connotations. I'm putting the exceptions aside, but largely I can make an assumption that 98% of the people who are here are well aware of what GST is, what we have to do. Now, having said that, still there are some challenges. The first and foremost challenge is we are aware of the subject, but the day by day there are notifications that come up, and if I have to just sum up, I have not included any notifications of SGST, so that would be like a Hanuman tale. But just if I have to see the notifications as such, there are, as on 27th August, something which is relevant is around 451 notification circulars and orders. So on an average each day we have one or the other document we should be reading or getting updated. So especially the circulars are very important. We have 59 circulars, so 56 in CGST, 2 IGST ones, where they have a lot of clarificatory in nature, where the department has clarified certain aspects how that has to deal with. So along with the act, one has to read this. So now I said we are clear with many things. Let me say what we are not clear with, or what are the challenges which we are facing. The first and foremost challenge is, what is the status of the filing? Now some of you might be handling one SSC, one client, or from the industry, just one account, but many of you have multiple returns to be complied, or there are multiple registrations in multiple states, the returns have to be filed. The first and foremost compliance one needs to know, maybe at the director's level or audit committee level or CFO, they need to know what is the status of the filings. Or if I am undertaking the filings of the returns for the clients, I need to know what is the status of the filing. There shall be a status course dashboard, which is stating what are the returns filed, the timeliness of the returns which are filed. If you recall the good memories between August to say October, November, availability of the portal itself was a challenge. In fact, the accountants used to find if the portal was open and successfully I could submit it, then what a great relief, as if it is an Olympic medal achievement. And the smile indicates that most of you have gone through that phase also. And at that point, what was more relevant was filing of the data. Even if some record went wrong, it says processed with error. The first thing is, okay, delete that record, let's file, let's see the impact of it later. So the focus was more on filing of the returns, and that immediately compromises the quality of the data which gets into it. So the next status which issue comes is the correctness of the data which is getting filed. Is it really everything which is required to be filed? Is it filed or not? Was the second question, second challenge one would have. Next, the volume of transactions. Day by day businesses grew, and today this is a technology era. Everyone talks about what is your market, not just your city, state, India. It's a global is a market. So everyone tries to expand, and so the different type of terminologies come up. Businesses are creative, businessmen are creative, including banks talk about products. So even the current account, SB account has a product. So everything is sold in a different way. Now given that the new dimensions of things are happening, if the same data has to be customized or you have to calibrate into your filing software or accounting software, this is another challenge. Whenever a new transaction or a new method of transactions are happening, handling that is a challenge. Next, at a compliance audit. Now, most of us do not have this practice of an audit. Forget GST audit. GST audit definitely is to come. In fact, morning also someone was asking me, will there be a GST audit this year? Why not? There would definitely be an audit. In fact, the first year is the main reason you should have an audit, because there are many errors or many understanding issues, something could have gone wrong. The even more necessary for an audit should be when there is confusion. Now forget the GST annual audit. There is a mandatory requirement, everyone has to get the GST audit done, maybe monthly or quarterly. Earlier in VAT regime, we did not have this concept of getting a VAT audit on a monthly basis, but most of the excise consultants where the excise activities were there, there used to be an excise related audit per se separately. Like a financial internal audit, there shall be a GST internal audit, maybe monthly, quarterly, whatever is the periodicity, but it ensures the compliance levels are up. So the another challenge is the audit not being done by an external agency, a periodical review not done by an external agency, whether the things which are happening is correct or not is the second challenge. So I am talking these challenges broadly at a management level, or if a chartered accountant practicing the compliance for others, it could fit into any of this. Then we just saw that the various notifications which have come. Now, are we timely updated? Are the team who is handling it, are they timely updated? Whenever there is a rate change, the effective date of the rate change, whether that has been complied, or whether there is a change in the way in which you have to charge the transaction, or the valuation mechanism is changed, or your understanding about the classification has changed. So whenever those changes have happened, whether they have been rightly handled or not. Handling supplies to SEZ was a big challenge. The filing of the returns itself was a challenge. So whether to be reported in a B2B section or whether it has to be reported in table 6B where it has to be reported was a doubt. And there were options of with pay, without pay, under LUT, all those concepts were there. And SEZ services were like considered as an export. Now that was more like a new concept. And some of the industry did not even know that okay, there is a concept of okay, if I am making with to SEZ sales, there is a process of refund which I can make. So the certain concepts are also new. Now those things are also not handled properly. Eligibility of the credit, some areas are pretty clear that they are not eligible. Some areas are still lazy. So the accountants were not aware whether the credits to be taken, not to be taken. So there were a lot of issues which has happened in the eligibility of the credit. Now as a management, do I really know that okay, are the credits which have been taken, completely everything has been taken? I don't know. Whether whatever has been taken, is it 100% eligible? Again, like I am relaying my team would have done a good job. And I have sent them for the GST trainings, so I presume they would be known. Now again, so this is like a statement which is made a reliance on others. Still there is a doubt that is that correct. That's another challenge. The last set of challenge is reconciliation. In fact, in whole of my next session would be only on this topic of reconciliation. The next set of challenge is the data which is being filed. Is it completely correct? Now, books of accounts. Does books of accounts get changed month on month? Or once the month is closed, we are so tight that we do not post any backdated entries? Is there something like that happens? If that happens, ideally 20th April I can call statutory auditor and say that okay, my books are frozen. But we know that there are some backdated entries would come, or month end the marketing team would come and say reserve 2 invoices, these are the orders which have come. And 5th or 7th you will still follow up and say that okay fine, they say the order is cancelled. There could be, every business has various challenges that whether or not a sale would conclude or not. So first and foremost thing, handling the data which is changing post filing of the returns. The taxation department, which is responsible filing of the data, they are focused. If I have to file the returns, in September I have to file the returns for August 2018, I would look at the trial balance of the transactions of August 2018 and I will file it. I am not really concerned what I have filed in June 2018, July 2018 or April 2018. Some change the accountant has happened. Now accountant would say, I have given you the entire financials, the data, the books of accounts are with you, you should have checked. Or the taxation team, unless you update me that there are some changes, I do not know that would be the experience or the response from the taxation team. Now there would always be a conflict about handling the changes which is happening to the data post filing of the returns. The biggest thing which I am noticing during the most of the audit is a month closure entries. Most of the organizations do not record a month closure entries. In fact, in the coming slide I will explain you how do you close this. Unless you do the month closure entries, the controls are not built into your GST returns. That is one area where there are a lot of errors which happen. Then there are differences which creep in the returns. So I am filing the returns based on certain assumptions. Books of accounts are there within certain assumptions. Now the differences between books and returns are timing differences in nature. So you need to capture whatever are this timing difference which needs to, you need to make adjustment in the subsequent period. So one classic example is like your advances. The taxes which you are paying on advances is just not a liability which is gone forever. You have to find out whenever the invoice is happening, you have to again retake the credit of that advance liability which you have paid. Like that there are many, we will see. But this is another challenge, handling the timing differences. Then the biggest thing currently the industry is facing is how do I reconcile my 2A versus books. And for 3 months everyone was sitting into the discussion, should at all I should reconcile. 2 and 3 are suspended, 2A I do not care what it is, I do not have a relevance to it. We said all the stories, but finally we reconciled ourselves saying that okay, 2A and books have to be reconciled and I have to take an action of whatever are the differences which are there. So that's another challenge which we have. And 3B and 1, both the returns are filed at different point in time. So both would be carrying a different values. Reconciliation of that, whether both are having a correct values or not, is another challenge. Inter-unit transactions, the inter-unit reconciling head office branch itself is one challenge. On top of it, we have good advanced billings which says that okay, you do some service related billings also. So the valuation and invoice raising between inter-unit billings and including if there are ISD credits which are distributed, because these are just accounting documents, so which has to be exchanged from the head office to the branch or the other units. So the less regard or less attention is paid. Anything which is internal, we tend to make no attention or we will not give any care. And the reconciliation of the book balance ledgers and department ledgers, there is no habit of reconciliation. So that is again giving a different values. So broadly, if I have to say that these are the challenges which an industry today facing in finalizing the GST or getting ready for the GST audit. So with this premise, I would like to begin my session. Is there anything if you think that I have missed, or if you feel that okay, there is another challenge which you are facing, or in terms of the knowledge understanding is also poor, do let me know.
Transition issue.
Pardon me, sir?
Transition issues also.
Transitional issues. So there are transition issues. I am not going to deal much of the law, tax related aspects. We have Rajesh sir here, and there are other eminent speakers who would also be coming who can deal with the taxation related subject more effectively than me. The first and foremost thing, annual audit, the GST audit would prima facie revolve on the annual returns. Not that 100%, but the prima facie. I am sure by now you are all aware of the definition of the audit. Yeah? From the morning, have you seen the definition of the audit? Right. What is the focus of the audit? 2 subsections, I think.
Correctness of the returns.
correctness of the returns filed and reconciliation of the turnover which is declared. It's like that audit itself emphasizes the word reconciliation. Alright? So the main focus, that doesn't mean that the only focus, the main focus of the audit would be what is the data you are supposed to file in terms of the returns, the compliance level, vis-a-vis what is the data which is there in the books of accounts, or what should have been the actual data should have been filed, is the first focus of the audit. So if I have to go to section 44 subsection 2, which says the furnishing of electronically the annual return along with copy of the audited accounts, which is again largely discussed what audited accounts, so maybe the statutory auditor or tax audit data, and the reconciliation statement. So reconciliation statement has a main prominence. This is as per the Act. Reconciliation statement, reconciling the value of supplies declared in the returns furnished for the financial year. So you are reconciling the value of the turnover which you have disclosed. The turnover includes exempted turnover. Anything which is exempted, again, and less regard or less attention is paid. We will see detail. And along with the audited financial statements and such other particulars as may be prescribed. Like even in our tax audit, the audit report is 3CA, 3CB, but such other particulars are there in 3CD. The details are in the devil. The devil is lying in the details, where huge list that would come. Hoping first year there would be relaxation in the ask of the such other particulars, so their main attention would be the reconciliation. So you should be geared up in having the data ready for reconciliation, or at least by now to the date of the filing. When do we have to file the annual return and the audit report? 31st December. Would there be a due date extension? We have already made up our mind that it would be extended. And per se our culture is like it is our birthright. 20th is the return filing date, we file only on 20th. 30th September tax audit, 30th September I will upload the return. So that's the thing. But during one of the discussion with the lawmaking body, they said we see no reason why we have to extend. Though the annual return can be filed from 1st April to 31st December, doesn't mean that 9 months later the annual return is released. In fact, this week the annual return format would be released. We don't know. As I complete the session also, annual return format they may publish it also. However, 30th September is a key date in the GST for anything. Reporting of your turnover, reporting of your credits, everything. After 30th September, you have nothing to do with the previous year data. Any correction you can do only in the annual return. You miss the bus of 30th September, you can't even report a sales invoice, you can't even report a purchase invoice. The credit is not eligible, liability also to be paid only through the annual return by disclosing the additional thing. Books of accounts are closed, tax audit due date is over, transfer price audit is also over. Technically, March 18, data numbers are closed. So there is no reason why we should extend the GST audit, and we are not asking the statement of other details to be furnished. We are not going to ask. In fact, if you have seen the draft 9C and 9D which was there in circulation, it was around 56 pages. So get prepared, 5 years later you would have to do it. But now you would have a 4-5 page reporting. But at least 4-5 page reporting, if you are not geared up, then it is something which we should actually question ourselves. Today's session would give you a lot of insights of how do we get geared up. Reconciliation statement which you would be filing would be something of in this context, where you would be reporting the data which is auto-populated of values you have already furnished between July 2017 to March 2018. Whatever the data which has been furnished, you would already have. You would have a next column where you have to manually report Considering Circular 26/2017, if you have made some adjustments, amendments or corrections in the financial year 2018-19, for 2017-18, those adjustments you would be reporting in a separate column, which is again more like a timing difference, where these differences would be taken to your next year annual return, because that much turnover to be adjusted in the next financial year. Then there would be an additional column which will ask for, over and above this, if there is a data which is missed out, comparing with your books of accounts, you will be now reporting that additional data, basis which if there is an additional tax liability that would be coming on submission of your annual return, that becomes your again a return related liability which gets added to part A of your electronic liability register. Along with the turnover, you would also have a reporting of your tax credits. So there is an outward supplies reconciliation and a tax credit reconciliation. Broadly, your annual return would have this kind of reporting. You would get a format in this week where you will get a clarity as to, in fact the format is 4 pages. The explanation to it, they have given it a detailed explanation for us to really understand what data to put it in which table. Let's move on to reconciliations. First, why at all we need to have this reconciliations? Reconciliations because we have to finalize our books of accounts. So for finalizing books of accounts, we should also keep GST also in relation to the application of the law. So we have to keep GST perspective and finalize the books. Determining correctness of the data which is reported between 3B and GSTR1. Determining the errors which has happened, or facilitating to reply to the notices, show cause notices which is issued by the department for various reasons, or determining if there are missed out credits or the credits which are eligible, which you have to take. So you have to ascertain, or you have to get ready for your GST audit. If you don't do all the reconciliations which I am going to say, you would have a tough time in conducting GST audit, because as a GST auditor, I would again be asking all the reconciliation which I am going to show now, but that to be shown before I certify the GST reconciliation statement. What do I reconcile? If I have to reconcile, I have to reconcile 3 sets of data. I have to reconcile with my books, I have to reconcile with income tax returns, I have to reconcile with GST returns. You might be wondering why income tax returns, that is a settled area, everything is closed. So I will explain why you have to have a reconciliation. If not for GST, you will get an income tax notice, because in income tax returns you will report GST turnover. There also you will get a notice that okay, in income tax your turnover is so much, GST turnover is so much. Why is there a difference? In fact, some have an experience that I should do a business such a way that I shouldn't get notices. In fact, I don't know if you have seen the business in 10 years. Some department would give a notice, PF, PSI, labor, income tax, some notice would come. Getting a notice is absolutely not an issue. If we do not have the right data to respond to that notice is actually an issue. We will understand broadly that there would be differences. In fact, if there are no differences, you should be really worried that there is something wrong. Having differences is right, and it will very much be there. The differences would be there. GST is not aligned with the accounting norms. GST has its law, accounting is governed by accounting standard, Ind AS accounting standard, whatever are the accounting standards, they are, so both have their own thing. Accounting goes by accounted value, GST goes by transacted value or a taxable value. Reconciliation of the differences, the reasons why this divergence are there, is the only job of an SSE or a dealer to say this is the reason why the difference exists. We need to definitely know, if I am an auditor, I have to sensitize the client that there would be a differences, you should reconcile and give. If you are a client, you should explain to the auditor stating that there would be the differences, here are the reasons for the differences. So thinking that both should match is a myth. In fact, it is a wrong notion. It will not match, it should not match. I will explain in a while why it should not match. So our job is to identify the area-wise area and why there are deviations. What are we reconciling? first we also saw why we have to do. What are we reconciling? 3B, 1, 2A returns books. These are the 4 sets of the data we are reconciling. How are we reconciling? There are comparable tables between one data to another data. There are comparable tables. You have to identify which are your comparable tables and you have to compare. So I will take you through first outward supply related reconciliation, then we will go to inward supply reconciliation. Coming to the outward supply reconciliation, I reconcile supply, income, revenue. Supply is a terminology for GST, income is from your income tax, revenue is from your accounting perspective. These are the 3 terminologies we use. So the headings itself is a different. We will first with my IT returns versus GST return. Income tax returns and GST returns, what could be the differences and would there be differences? How do we identify? Firstly, the definition of the turnover for the purpose of the GST comes from either 2 subsection 6 or 2112, where the turnover is anything my outward supply, taxable, exempted, non-taxable, and non-taxable has the whole world. So anything which is a supply is a non-taxable supply. But from the income tax perspective, there is nothing called turnover in the income tax. If you read the Income Tax Act, you wouldn't find the definition for the word turnover. However, if you read from the tax audit perspective, the turnover is a broad terminology. Now, there would be a differences between the turnover of the GST and turnover of the income tax. So first we will see how do I report it in my income tax. In my income tax returns, I report my turnover as sale of goods and sale of services. I report sale of goods and sale of services. Let me ask you a question. What do you mean by sale of goods? You would say, what a stupid question. Isn't it self-explanatory? Sale of goods means sale of goods. What else to explain? The definition of goods and service is not there in your Income Tax Act, it is from your GST Act. The definition of sale is not from your GST Act, it is from the Income Tax Act. Now it's a marriage between both of this. I'll give you an example. I am a dealer of AC, I supply AC, and the customer asks me that please deliver it to my home, I deliver it, I charge transportation charges also. What the rate of the AC is, say 12% or 18%, let's say. What should be the rate I should charge for transportation charges? 5%? What rate I should charge? 18% AC because of composite supply. What is the characteristic of this transportation charges? What HSN I would be using for reporting in my GST returns?
SEC.
HSN of AC itself. So one good thing in GST is, if I sum my HSNs of 99, it is service. Other than 99, I can say it is a turnover of goods. Now for the purpose of the GST, this is a transaction of supply of goods. Yes or no? The transportation charges. When I am recording it in my books of accounts, how do I record this sale entry? I will debit party 18,000 rupees, credit sale of AC, so 15,000 rupees, transportation charges some 600 rupees, then GST output, CGST, SGST, I will credit the taxation. I would specifically credit to a separate ledger because my management wants to know what is the margin I am making on the basis and what is the additional revenue which I am deriving. How do I now report? Should that the transportation charges is reported as sale of goods or sale of services? I presume you are more accounting wise, you will be having more knowledge than me. Where do I group? Sale of goods or sale of service? Sale of goods, okay. You agree sale of goods?
Under proposed, sir.
No, under GST sale of goods. But for here,
Separately each component.
okay, some everyone are saying service. I again twist the question and ask, then you will say goods. But here the ask is reporting from, if you read the heading, part A, profit and loss account, This is based on the books of accounts you are maintaining. In the books of accounts you are maintaining it as services, right? So you have your first divergence itself for what is the split between the turnover of sale of goods and sale of services, right? Coming to the next item, if you see, just you scroll down, there is a reporting of the taxes. The taxes collected also has to be reported. Now, do you have the taxes collected in your P&L account?
No.
Like excess duty, when we are reporting, we have to report the turnover at a gross level, then less duties collected, and the net. That's how the CARO requirement for the excess duty reporting. Excess duty also got merged to the GST. Can I do the same reporting? Yes or no? We have to finalize the 30th September. You can't be silent for this. Either you say yes or no. That's okay. Can I gross up my turnover and show gross turnover, less taxes, and outer column turnover in my financial statements? You can say little loud. I know that you had little lunch. No, right? Now, if that is no, what should I report it in my the taxes collected? 0. You should report it as a 0 because in your financial statements you are not showing your turnover inclusive of taxes, because this is prepared based on the financial statements. However, if someone is maintaining books of accounts and an inclusive method of accounting, only those will be reporting. Let's understand the detail, the differences for reconciliation. Firstly, GST turnover is 9 months, income tax turnover reporting is 12 months. Next, the turnover is wrongly reported in GST returns. I have made some errors in GST returns, which are corrected in 2018-19 returns. You will again have a difference. 2017-18 returns, I have erroneously filed some wrong data. So that is which is corrected in subsequent period, there would be a difference. Then the transaction treatment. Under income tax, there is no concept of making a turnover to myself. For the purpose of GST, it is a turnover. In fact, entire Schedule 1 transaction is a turnover. I am making a transfer to the branch, it is a turnover for the purpose of GST. But for the purpose of income tax, it is not a turnover. I have to eliminate that. Yes or no? Certain transactions in my income tax, I report it into a different heads. Like sale of assets, profit or loss on sale of assets. I don't report in my P&L account the gross value. But for the purpose of GST, I have to report the entire transaction value of the sale of the asset. Income from house property, the value is recorded in the house property income with the deduction and all those things. But it is again a supply for the purpose of GST. So you should also have a bifurcation. If a turnover is reported under different heads, or if it is grouped as a net in the profit and loss account, you would have the another reconciliation difference. Lastly, the income tax is done at a PAN level, GST returns are at a GST level. So you should have summation of all the GSTs matching with your PAN turnover, so along with these differences. Now, do you fairly agree that there will be a differences between your turnover of the GST and income tax? Yes. Thank you. Now moving on to the books versus returns. Books versus returns. Firstly, the recognition concept itself is different. The ask of recognition of an income in the books is by your AS 9, where you need to have a reasonable certainty. The risk and reward should be passed on, only then you will recognize the revenue. In fact, the Ind AS for some industries, the buyer should confirm the risk and reward has been passed on, only the revenue can be recognized in the books. But when it comes to the GST, you go by section 12 and 13, the time of supply, and you follow the earliest of the three, raising of invoice, provision of the supply, or the collection of the money. Thankfully, advance for goods have been deferred for some time. So, the revenue recognition under GST is different, and the revenue recognition under the books of account would be different. I am an AMC contractor. 1st of the January, I have undertaken to provide an AMC services, and I have raised an invoice for the 12 months. For the purpose of GST, I will be discharging the entire GST. But in my books, I recognize revenue, I break it into 12 months and recognize revenue into to 12 months. So the concept of the revenue is different when it comes to the books and the GST. So you should appreciate the fact that everything which is recorded as a revenue is a timing difference. So on a larger scale, all these three would merge: income tax, the GST and the books would merge. But when you are seeing in a different periods, the revenue would fall into one or the other period or one or the other bucket. There would be a difference. One needs to appreciate that fact. Likewise, the past performances recognized in full. So something of the past I may recognize revenue here in the books for the current period. We saw the composite and mixed supply differences. So the classification of the goods and services would be different between the GST and the books of accounts. The non-cash transactions are again off the books. Though you are making an inter-branch transfer, you are treating the revenue for the purpose of GST. For the purpose of the books, you will not treat it as a revenue. You will not inflate your sales, you will not inflate your purchases. You would net it off like your AS21. In your consolidation of all the branches, you will knock off all your unit entries, right? The very important fact one needs to understand is this debit note. From the perspective of the accounting, anything if I am debiting a party is a debit note. Like debit note is, I am debiting a party and crediting anything is a debit note. It's like I made a sale, customer denied making the payment, then I have no choice, I have to credit him. Or I have recognized some value, or I have made a purchase, I have rejected the goods and the customer is asking the payments, I said I am not going to make the payment, I debit the customer. Anything I am debiting a party is a debit note from the accounting perspective. But from the GST perspective, 34.3 says what it is a debit note. It is like more like a supplementary invoice. It's like I have to collect some money, I forgot to collect, I am raising an additional invoice. Only that is a debit note under GST. From the accounting perspective, to a party, to a vendor I am debiting, it becomes a debit note. Purchase returns is also a debit note, or I am out of pocket expenses which are collecting from the customer is also debit note. I am debiting something, it becomes a debit note. You need to have a different series of documents, an accounting debit note versus GST debit note. In your ERP, you should configure to record these two separately, because this accounting debit note, there is no requirement from the GST. But a GST debit note, you need to have a series of the vouchers and these vouchers to be reported. So there is a difference between an accounting debit note and a GST debit note. Though this presentation would be made available, if you suddenly flash some points which you have to correct or educate, you can very well make note of in your books. Understanding that there would be differences, one has to prepare a reconciliation statement between the books and GST or like your bank reconciliation. Turnover as per my books of accounts vis-a-vis the turnover as per the returns. Now, the turnover as per the books of accounts, I have prepared a sample reconciliation, and ideally I just made for the last year for you to understand, but I expect everyone or every SSC should prepare this on a monthly basis. I will explain you why also. First, I will begin with whatever is the turnover in my books of accounts. I have to eliminate the income which I am not reporting in my GST returns. For me, if I am considering a transaction need not to be reported, I have to eliminate that transaction. Next, I should eliminate a Schedule 3 transaction which again I am not reporting in my GST returns. I have to eliminate, which I think in my view I need not report into the GST, I will eliminate it. Second, the April to June which was of the previous law, I am eliminating that. So I have derived a number expecting that number should match with my GST R1. The first difference, the inter-branch transfers which is there only for the purpose of GST, not in the books. I have to add such kind of transactions. Next, the receipts which are capitalized into the books of accounts, I have routed directly to P&L account, not to the directly to the balance sheet, the capital account, and not to the P&L account, like certain subsidies, etc., where I have to pay taxation from the GST perspective, but I have capitalized from the accounting perspective for various reasons. or some certain receipts would have been netted off with the expenditure for various reasons. So you have to add those transactions. Up to this is more like a permanent differences, which will not recur into the next month. The next transactions are timing differences. No, this is also a permanent difference. The profit on sale of capital goods. My P&L account only has a profit on sale of capital goods, but for the purpose of GST, I have to show full value of the transaction. So I subtract my profit which is earned and I will add the full value of the transaction. Then the advances received. Advances received do not form part of your P&L, but for the purpose of GST, I report it in my table 11 and pay taxes. So you have to add that for the purpose of arriving whatever is the tax to be paid. But whatever you are adding again the next month or the month in which you have provided the service, you have to remove it. Then accounting recognition. I make an unbilled revenue end of the month. I have raised invoice on 1st April or 2nd April. From the GST perspective, I would be paying tax in the month of April. But from the accounting perspective, I would recognize revenue in the month of March. Next month, I would be reversing it in the month of, it is like an unbilled revenue. Whenever the invoice is happening, I would make an adjustment of it. So certain items are a timing difference, certain items are permanent difference. Now you have to have a reconciliation statement. Last, very important, is plus or minus any similar adjustment. So whatever you feel which is necessary for your industry, for your client, you should have it. Like a hotel would recognize the revenue on an everyday basis, they post it to the room account. But they would issue invoice whenever the party is checking out. And like Airtel, Vodafone, on everyday basis the units consumed, they recognize the revenue. Having recognized the revenue, it is not a supply. So the supply happens on 24th, 25th, whenever the invoice is raised. That is when the invoice becomes a taxable invoice for the purpose of GST. So every month you should have a tracking of what should be your expected turnover that you need to report in your GSTR 1. So you began with your P&L account, you reached what you will be reporting in your GSTR 1. Is this clear so far? Right. Now, reconciliation of turnover is one side, the reconciliation of taxes is the other side. This is one area 90% of the audits or the accountants fail to do reconciliation. The tax ledgers have to be reconciled on a monthly basis. Whatever the balance which is there in the tax ledgers should have a correlation with the returns which is filed and the balances maintained by the department. You would achieve this reconciliation only when you pass a closure entries. A closure entry is something like this, where end of the month, basis you are filing your returns, you would debit your output GST ledgers and credit electronic liability ledger, electronic liability CGST, SGST, IGST ledger. This is a closing entry. Mandatorily you should ask the clients or you should close every month. It serves two purposes. Your SA 500, where you need to have an external confirmation from the audit perspective. If you see a balance in an output ledger, what does that ledger balance means? Currently, if you do not post this month-end entry, nothing would be explainable. But if you record this entry, ideally, end of the month if you are posting this entry, ideally your output GST balance should be 0. The basis for posting this entry is your GSTR 1. Whatever the data you are reporting in your GSTR 1, basis that you will be recording this month closure entries. After you record this entry, the balance in your output CGST should become 0. If it is becoming 0, then you have reported correctly whatever the taxes which you have collected. However, after still recording this entry, if you are finding a debit balance in your output GST, means you have over-reported your turnover in GSTR 1. Or if there is a credit balance in your output GST, you have short-reported some turnover. You have still not reported some turnover to the GSTR 1. So it is more like a forensic accounting, where the accounting entries will build controls into it. The second purpose it would serve is external confirmation. The balances in your electronic liability ledgers would match with the balance in the government portal. Government is also maintaining 3 registers. It is matching with the government portal. So to the extent of the balances in this ledger, auditor will not even ask a single question because it is an external confirmation I am having and it is matching. But as an accountant, if there is a balance which is left in this ledger, you are answerable. You at least can nail down and see what is the error you have made in that month return. So that's how it serves the purpose of your control and reconciliation and confirmation. This is one entry. Most of the cases I have noticed that there is no practice of doing a month closure. Certain other, so the last one is, yes sir.
So this entry that you have told, that is for the taxes account, to match the taxes account.
Yeah, by the end of the session, all these entries will become 0.
Now, going one step before, for the sales entries, now sales entries are maintained in the books as per Ind AS.
Correct.
However, there will be numerous entries. I think equivalent to the Ind AS entries, there will be entries which are to be maintained as per the GST, like transfer on inter-unit transfer and all those things. Don't you think that this one entry which we have passed, adjustment entry for the tax, should also be passed for the sales, making the sales as per Ind AS, because you will be accounting all the GST sales also in the books.
Okay. So a question, right question which is asked, should I not have the sales reported in the books itself, like the pre-file, the kind of the statement which we have seen this? Should this entries which I am instead of preparing a reconciliation statement, should it not be there in the books? My answer to this would be no. Whenever I am recognizing revenue in my books, like unbilled revenue which I am recognizing in the books, I am not going to recognize the tax effect of it because the time of supply did not arise at that point. Whenever I am raising an invoice, say I am a works contractor, I am recognizing revenue based on the stage by stage. So I raise a demand to the customer, based on that liability arise, I pay to the GST. But for the books of accounts, I might recognize the revenue based on the percentage of completion basis. So there is a timing difference which would happen. So you have to maintain books only as per Ind AS or the accounting standards. You need not integrate that both the things to be exist in the books. However, having said that, since there would be a difference, you should have a reconciliation statement like a bank reconciliation statement. It's like it is very well known that there would be a difference between book balance and the bank balance. Like a check issued, not deposited, or deposited, not credited, which should have a reconciliation stating when is that corrected. That is why I said on a longer range this would match, but in the timing difference it would not match. So to the extent of the tax ledgers, you should have the accounting entry. Revenue ledgers, you need not have an additional entry, but a reconciliation statement would suffice. Moving on to GST returns versus GST returns, like my favorite Surya versus Surya movie type. What is there to reconcile between returns? Should there be a reconciliation first? Would there be a reconciliation?
GST 1 and 3B.
Sir is saying GST 1 and 3B. Why should I reconcile? Would that not match?
Not necessary.
2A and 3B.
2A and 3B. By the way, which part we are talking? Outward supply or inward supply? Outward. So I am talking GST 1 and 3B. I am not talking of 2A and 1 or 3B. It's an outward supply. So your 3B and 1 you have to reconcile. Why should you reconcile? Because we file both at different point in time. Initially, GSTR 1 is filed 2 months after 3B. So 3B while filing, my understanding what is there in 3B, I would file it. Then by then someone would call and say that no, that is not how you have to do, this is how you have to do. Then I realized, or by the time I filed 3B, books were not closed. But when I am filing GSTR 1, books were closed. I want to take the correct data and I will file GSTR 1. There could be n number of reasons. There would be a difference between GSTR 1 and 3B. So you need to have a reconciliation statement between between returns. So before I move between the returns, let's quickly understand what do we file. Table 3 is where we report all my outward liability, our turnover and all my liabilities. So in this you can ignore 3D, it has got nothing to do with my turnover. So it is inward related liability. So basically all my taxable supply other than export, nil and exempted is there in 3A. Export is there in your 3B, which is 0 rated. Nil and exempted is in 3C. Non-taxable is there in 3D. This is the reporting of my turnover as per GSTR 3B is concerned. When it comes to GSTR 1, I would have reported, I have further bifurcated my turnover into pieces. Head in one place, shoulder in another place, legs in another place. You have broken all your turnover, however you can break it and fit into various compartments. After doing this, we forgot what is there in GSTR 3B, what is there in GSTR 1. Now it is the time to wake up and reconcile. How do I reconcile? First, whatever the data which is there in 3B, the first part, 3.1a, which is outward supplies other than 0 rated, exempted, nil, non-taxable, should match with whatever the turnover you are reporting in your table 4, table 5, table 6C, because it is a deemed exports not 0 rated, table 7, all your B2C supplies, table 8, nil, exempt, non-taxable, table 9, amendments to 4, 5, 6 and debit note, credit notes, table 10, the amendments to your B2C supplies, table 11, the advances received and advances adjusted. Summation of all these tables should match with my 3.1a. That's the first exercise. Next, my 3.1b, outward supplies which is 0 rated should be matching with my reporting which is done in 6A and 6B, both direct exports and SEZ supplies. This is the second data which should match. The third one to match is the reporting which is done in 3.1C, 3.1E. Should match with my table 8 of GSTR, nil rated, exempted, non-GST supply. How do I prepare a reconciliation to match this? You should prepare a reconciliation something like this, where each section by section, so first one is of 3B, second one is of GSTR 1, month over month, month 1, month 2, month 3. In fact, I have just stopped at March. I would say you should continue till date, because for your corrections which you have done based on circular 26 by 2017 in the subsequent period, you would also have to include it. So on a YTD basis, you should reconcile. This is what I should have reported. Like if you see in the first month, 1 crore 16 was reported in table 1, 1 crore 18 was reported in table 3B and 3B. But that was corrected to some extent. In the second month, they have short reported in the 3B and GSTR 1, they have made this correction. Likewise, if I expand, by the time if I see the March, I find 19.6 crores is the value which is reported in GSTR 1 and 19.3 crores is reported in GSTR 3B. So I have a difference of 28 lakhs which needs to be corrected. Do you get this? You need to have a reconciliation statement on a YTD basis which needs to be corrected. Now question to you, where do I correct this 28 lakhs? In 1 or 3B?
GSTR 9.
GSTR 9. No sir, this can be corrected in the subsequent months. So read circular part 26 part 2017. How do you correct the differences in GSTR 1 and 3B? 1 can be corrected in 1, 3B can be corrected in next month 3B. So that circular is clear. I need not, if you find a difference, please do not wait till GSTR 9. You can correct it in the subsequent months. Now question is, where this 28 lakhs, where do I adjust?
If we correct, we will get AS 2010. If we correct 61, definitely we will get AS 2010 number for 2 months. Replacement current number. You have to answer that.
Yes sir.
Easy the answer you have to.
Yes sir.
It is possible to give value every day, right? Sustain your goal.
Definitely yes. I will talk ASM detail little later, but circular 26 is a clear circular asking you to correct in the next month. My personal view, you should correct in the next month so that your interest is reduced. If you have missed out reporting turnover in the month of the March, you can't say that I will report it in the month of December. Take your interest liability till December and and in between if there is an audit inspection happens, then you would be inviting penalty under section 73-74, which are even more dangerous in nature. Now coming back to this question, 28 lakhs, where do I adjust? 1 or 3B?
If the error is in one, if the error is in 3D, in 3D.
If the error is in both?
Both.
Yes. Whenever there is a difference, doesn't mean that you should jump the gun and reconcile. You should ensure your GSTR 1 is matching with the books. If the books is 19.5 crores, then you reduce GSTR 1 subsequent month accordingly, make it to 19.5, increase this 20 lakhs in GSTR 3B and make it to 19.5. So when you do that in the subsequent month, when you do the reconciliation on a YTD basis, the difference would become 0. So whenever you are seeing a difference, if you are seeing a difference for the month, you would not understand. There would be a difference for the month and the difference cannot be explained unless you bring the opening balance brought forward. So difference always has to be seen on a YTD basis. A reconciliation of this should be made for turnover and for the taxes for all the 3 items which you are seeing in GSTR 3B and 1. Is this clear? Any doubts? I will be moving on to inward supply related. Okay, before inward supply related, some issues in the outward supplies which I want to bring to your notice. Sales returns are net of sales. So whenever you are taking the YTD figures, please take the return sales net of returns. Lot of turnover would have been missed out in reporting, especially the inter-unit transactions, because this is off the transaction. It's like you will make a transaction, but especially for services, it is a management call to raise an invoice. Consignment sales not reported. The cancellation charges or interest from the customers for making late payment, all those additional monies which you are collecting, that is not reported. Interest earned on fixed deposit, it is an exempted supply, again that is not reported. The late fees collected, not reported. Gifts offered to the employees more than 50,000, again is deemed as a supply, you should pay tax, though not a turnover for you, for the purpose of GST you have to pay tax, that again not collected. Some reimbursement of expenses whenever it is made, those reimbursements are actually netted off with my expenditure ledger. So you need to, for the purpose of reconciliation, some of your reconciliation items may be on the credit side of the expenditure, which you have to take it for the purpose of reconciliation. You have to see where that is. Goods sent on sale or approval basis, 31(7) says within 6 months you should conclude the sale. So it is still lying as a closing stock in your books, but for the purpose of GST you should declare it as a turnover and pay the taxes. Trade discounts issued which is not as per section 34, the credit notes which are issued which are not as per 34. So there are only specific cases where you can issue a credit note. So if the customer says, okay, I am not willing to pay the money to you, you may pass a credit note saying crediting the party and debit the bad debts or debit the sales, whatever. But for the purpose of GST, it is not a valid credit note. It is an accounting credit note. On bad debts, you cannot reduce your turnover nor reduce your tax liabilities. So this is again an error which is happening because someone is not making the payment. You are passing a discount entry is again not correct. Permanent transfer of business assets without consideration should also be treated as a supply and to be disclosed. So wherever transactions which are arising for the purpose of GST, not for the purpose of books, a special attention has to be made because there are no controls since the entries are not originating in the books of accounts. Moving on to inward supply related. In inward supply, again the 3 words, inward supply, expenditure and the cost. Income tax you say expenditure, books you will say cost. We will begin with income tax versus GST. In terms of reporting, the first reporting of the GST is your input tax expenditure. So purchases at the input tax. So whomsoever again using the inclusive method of accounting, only they would be reporting the GST in your income tax returns. The next reporting expectation is the rates and taxes. how much of the tax GST is included in your rates and taxes has to be reported. So there is a bad practice whenever you have to write off a tax. Generally, it is debited to rates and taxes. If you can identify a tax originating which is the natural head of account, like professional securities have been high. Person has given me with the GST, I have taken the GST credit, but he is a fly-by-night operator. I did not find him after some time after paying taxes, and I have to write off that taxes. I will generally take it from my input tax credit ledger to rates and taxes, but that's not a right practice. You have to park it back to your natural head of account, which is like your security charges or whatever be the applicable nature. Last and very important reporting. Thankfully, for the purpose of tax audit, this has been deferred, where your total expenditure in the P&L has to be segregated into GST and non-GST. The GST expenditure has to be further segregated as exempted purchases, composition purchases and regular purchases. So this is a main expectation of the income tax. So now income tax department is also wanting to do a cross verification of the data. How do I get into these reconciliations? First we will understand the reasons for the deviations. Like as I said, income tax return is again at the PAN level, GST is at GST level. Whatever the references you saw for income, same differences you will find even for the expenditure also. I will not spend much time on these differences because it is more like a known. I will move more to a couple of things which I want to explain here is this provisions you make, the provisions and contingencies which you make in the books. Later when you write off against those provisions, the GST implication would be there. For example, I am making a provision for obsolete and non-moving stock. It doesn't call for reversal of my input tax credit. But this provision which is made, it is also need not be reported to GST. When I am writing off my stock, I don't take it to the P&L. What will I do? Since the provision is created, I will adjust with the provision. So whenever these adjustments which are happening against the provision, you have the implication of input tax credit. As a GST auditor, you have to check if there are provisions which are debited because they are not routed through the P&L. So you have already made the provision, now you are utilizing the provisions. There is an implication of input tax credits. Otherwise there is nothing much which you do not know in this slide. Books versus returns. In books versus returns, first and foremost issue is non-availment of the credits. Earlier in the VAT regime, the credit was not taken on fixed assets unless it is a plant and machinery. Even now someone doesn't know that okay, I am eligible for input tax credit. Even now I still get a question, sir, I am buying a mobile phone or a telephone in the office, can I take input tax credit? Or there is a furniture, a receptionist table purchase, can I take input tax credit? Lot of queries, I still keep getting it. So the credit of the GST is very much available subject to section 16 and 17. Now many people are not aware, they do not take my credits on most items. I paid GST on a reverse charge transactions. Most of the times again the credit is missed out in re-availing those reverse charge payments which are done. Bank charges, I cross it up and I just take it. I do the bank reconciliation, I found out there is a 10 rupee differences, okay, debit bank charges. The bank reconciliation is done. So most of the time bank charges will not again have a tax credit. Contrary, you may also find in the books credits which are available which you think or which as per GST is not eligible, especially 17 subsection 5 which are the blocked credits, or the credits attributable to the exempted supplies, or a proportionate credits, or credits of another state which you are finding. None of those credits are eligible. You cannot take those credits. That also you would be finding in your input tax credit ledger. Let's again see how do we reconcile that. Some other things, the common credits are not identified, like I am doing the both taxable and an exempted transaction. I do not identify common credits and do a proportionate reversal. And there are credits which I reverse, they are temporary in nature, timing difference. Example? Give me some example. I reverse the credit, but that is a timing difference.
Non-payment of invoice.
Non-payment of invoice within 180 days. I am reversing it. It's again a timing difference. I am reversing credit on account of rule 42 and 43. Again it is a timing difference. Because and I have to analyze. End of the year is when the actual credit will finalize how much to be reversed. So I should have a track of the reverse the credits which can be re-availed or which has to be readjusted. Then with regards to your reverse charge liability, sometimes is not paid, or if it is paid, it is not availed. There is a need for a reconciliation. The unregistered purchases, we have this 8/2017 which gave exemption up to 5,000 rupees. Beyond that, we were supposed to pay taxes on unregistered purchases, and thankfully that has been deferred till September 2019. Now, what does that mean? It means those purchases are treated as exempted purchases. The tax rate exists because it becomes an exempted purchase. The tax rate is 0, reverse charge value is 0, so we are not paying it. But are we reporting it as an exempted purchases in my GST 3B? Answer is no. The question is, should I need to report? Of course you need to report.
Even before that, up to 5,000 I need to report, right?
Not up to, so it is not up to 5,000. Any unregistered purchase is an exempted purchase based on this notification. Till 13th October 2017, up to 5,000 was exempt purchase. So up to 5,000 rupees I should have reported as my exempted purchases. So the question is, we end up not reporting everything. So I remind you back with 2 subsection 13 audit definition. It is verification of your turnover, which includes your exempted turnovers also. Not necessary that you are complying with the taxable turnover is a compliance. You have to see the exempted turnover reporting also is happening properly or not. Now, if you say that there is too much to report, too much to do, should I do it? Answer is yes, you should do it.
Turnover it explains does not include the turnover on which I need to pay tax on the reverse charge. The
Correct.
definition of turnover. It means
For the purpose of my outward supplies, unregistered purchase is not my turnover. For the purpose of your table 4 and 5 reporting, in your table 5, do you report your exempted inward supplies? Yes. We report. We are more focused on table 4A5. Taxes has to get into that column. So that is the only column when everyone will remember. So this is again an error which happens. Then again this, like debit note we saw in outward supply, credit note here. Credit note versus a credit note. For the purpose of accounting, anything you are crediting a party is a credit note. But for GST, section 34(1) says only this is a credit note, So you need to have a separate set of series in the books as a credit note of accounting credit note and GST credit note. This is again an error lot of people are not complying with. So again, as a GST auditor, you should sensitize the client and say that okay, this is what you have to do it. If it is not done, it is not like a blunder. At least now start practicing it. So happened is happened. I can't do anything with whatever happened in the past. There is a way to rectify. At least now rectify and move forward. Some more issues coming. Provisions made for the goods, but written off happened at a later point, which we discussed. Some incomes are credited in the expense side. So you have to call out if some income aspect is credited to the expenditure side. When you are doing a reconciliation at the TP level, you have to split both and see it. You also have to see how much of the turnover is missed out in the reporting, both the credits or the turnover missed out in reporting, or it is reported but wrongly classified into a different head. So only when you do the reconciliation, you will get to know. I will show you reconciliation. Again, 3 sets of reconciliation. First, the gross, the turnover side reconciliation. When I say turnover, inward supplies, purchase reconciliation. I have my expenditure in the P&L. Because I have to report even for the income tax, I should start practicing preparing this reconciliation. Total turnover, total debits of the P&L, eliminate where GST will not be applicable. In fact, this is definitely going to come in 44A clause of 3CD, the next last year. So you have to eliminate whatever the GST would not suffer. You have to park it into a separate place. Then the invoices received and adjusted for expenses on the provisions made earlier. So on month end I will make a provision. I did not get an invoice from my the rent. I make a just debit rent credit the provision for rent, or debit consultation charges credit consultation charges. I just close my books of accounts by making a provision. My invoice is actually received in the subsequent period. So GST credit happens in the subsequent period. GST expenditure happens in subsequent period. So you need to have what are the again timing differences which are happening. Similarly, advances paid to an unregistered purchases, there is a liability. So though it is deferred for something, but you still have a liability where you will be paying taxes which you need to track for reversal. So one is the turnover reconciliation. Next is the tax reconciliation. So the turnover reconciliation I also want to do it in a little different way or a much easier way for you to have a better control. And today there are tools for you to do it. Take out all the vouchers which are there in your input CGST SGST ledger. From those vouchers, read the contra item. Read the contra item. Contra item would be two: vendor, expense. Expense wise, summarize all the vendors. Track the tax value, taxable value, transaction value. Now, if you see this first column is your expense. So against this expense you have all the vendors which is listed. So consider this is like a pivot. I sum it up. So I have my purchases redrawn from my input tax ledger, not from the P&L. So my purchases redrawn from my input tax ledger. I have my total GST, total expenses. Now for this purchase ledger, compare with what is the value which is there in the trial balance. Compare what is the value which is there in the trial balance. In fact, as a GST auditor, if I am doing the audit, this is exercise I am definitely going to compare and see whether your reporting is correct or not. And today there are tools which can solve this comparison in 5 minutes. Then you would have a difference. This difference you analyze against each expense, whether is it GST really not applicable, how much of this GST is not applicable, how much of it pertains to composition purchases, because that is why you have no input tax recorded, or how much of it where it is a reverse charge liability you should have paid, you missed out. In fact, when you do this exercise, you will have two benefits. One, you will realize if there is a reverse charge, especially the foreign transaction management is paid to the head office after you did your transfer pricing audit, you provided those entries, all those things. You would be recognizing how much is the reverse charge you missed out. Or you would see that, okay, how come there is no credit? I have my purchases input tax credit recorded, the purchase value is 5 crores. My trial balance is showing 7 crores. Difference, this 2 crores definitely cannot be a composition purchase or an exempt purchase. When you extract those vouchers and see the accountant has made a mistake in capturing the taxes, you would find a missed out credit. So you will find a missed out credit. Or it could be when you take this and apply to your GSTR 2A, you will interestingly find some expenditure itself not recorded. So this is the first reconciliation you will be doing for the taxes. You will be doing for the expenditure using the tax ledgers. Closing entries. You have to have reconciliation of your input tax. Like I said, you have to have reconciliation of your output tax. The way you are reconciling your expenses, the gross level of the P&L, you should reconcile the taxes which is there in your balance sheet item also. It is mandatory, one has to reconcile. How do you reconcile? By passing the closing entry. You will, based on your GSTR 3B, don't read 2, it is not there. Based on your GSTR 3B, whatever the value you are reporting in your table for 4A and 4D and 4B, putting all these values together, you would take the debit to your electronic credit ledger and credit your input CGST, SGST, IGST ledger. By posting this ledger, ideally what should happen? Balance in your input CGST, SGST should become 0. If there is a balance still in your input CGST, SGST, which means if there is a debit balance, you have not taken credit full. If it is a credit balance, you have taken more credit in your GSTR 3B in your table 4. Wherever the credits you are writing off, you have to charge it off to the P&L. So it is helping you two purposes. One, accounting errors are tracked at the time of filing of returns. Second, the external confirmation. So this balances which you are writing in your electronic credit ledger would match with what is there in the government portal. So you have an external confirmation. Again, as a GST auditor, to the valid transactions up to this, you need not verify it is matching with the GSTN portal. You will only verify the application of the law, correct HSN, correct rate. You will not be doing the technical verification because this is matching with the GSTN portion. So you would only be worried with the smaller balances which are left, which is an accounting error. An accountant has to explain why there is a balance in your input CGST even after posting this entry. This entries should be month-end entries. If you post it on 20th, then you will never be able to reconcile it. You should post it on a month-end. After posting this, how do the books get closed? How do these new entries which I am showing up, how would they get closed? They would get closed whenever you are making the payment of tax. You will debit your cash ledger and credit the bank. Basis your offset liability which you are doing in your GSTR 3B. In your offset, you are consuming some credit ledger balance, you are consuming some cash ledger balance, and you are offsetting your liability. You will debit your electronic liability ledger, you will credit your electronic cash or electronic credit ledger based on 3B. Then these ledgers will automatically match with whatever the balances which are there in the government portal. So again, the external evidence, external confirmation which has been taken care. It's like this would address 95% of your transactions in your balance sheet. So that 5% is an accounting error which the accountant necessarily has to explain when this has been corrected. Some other items of reconciliation where you have not paid to the vendor within 180 days, you would be reversing it, which is again a timing difference. Or if it's an ISD, credit note, debit note adjustment. Any ISD you will apportion based on the turnover. It is like internally finalized. So when a credit note or a debit note which is raised, you have to segregate eligible duties and ineligible duties. There is an error which happens, they just pass a general credit note, again the entries will not match with the credit ledger balance. Then the reversal which is made on account of rule 42 or 43, it is again you have to recompute that reversal on a yearly basis. What I have noticed is some of them do not do on a monthly basis, they do on a yearly basis. Some of them do monthly basis, they don't do yearly basis. In fact, not doing monthly basis, doing on a yearly basis is also more right because you have concluded on for the year. Of course, you will have the liability for the interest for non-reversing in time. But on a yearly basis, that has to be done. That is again something which is not done on a timely manner. Then comes the last set, Surya versus Surya back. GST returns. What is the returns which I am talking here? That is earlier outward supply, it is 1 and 3B. Now I don't file the multiple returns. What is the reconciliation we are talking here?
2 and 3B.
2 and 3B. Should we reconcile 2 and 3B? Is it mandatory we should reconcile?
No, not mandatory.
Not mandatory.
Not mandatory but desirable.
Sir, if we say not mandatory, no, we will not do. Yes. Doing what is mandatory itself is taking a lot of time. If I have to do not mandatory, why should I do extra work if there is no incentive when I am not paid for it? 2A and 3B, not a desirable reconciliation, I would say a mandatory reconciliation for various reasons. In fact, that will give it will give a smoother business purchase. I am sure you saw the new return formats which are going to come from 1st April. Most of the suggestions also have been received by the GSTN. Minor tweaking would be there, but more or less the returns are finalized. From 1st April it is going to come. But they are very clear that if a credit is there in 2A, only then it becomes your credit. Otherwise it is not your credit. You may say that it is section 16 violation. Then they have addressed that also and said that it is not section 16A violation. They have inserted section 43A clearly, saying 43A will take care of it. So government is clear that if there is a credit in 2A, it's a credit to you, otherwise it is not your credit. Let's see how do we reconcile this. The reporting of my input tax credit is there in table 4 of GSTR 3B. Table 4 has 4 section 4A, B, C, D. Easiest to remember is 4C because it is 4A minus 4B. I need not do anything with it. I cannot do anything to it. Let's understand 4A. 4A has 5 sections. 4A1 is your input tax credit on import of goods. B is second one is import of services. Third is inward charge RCM liability. Fourth is ISD credits. Fifth is any other credits. All that we know is any other credits because that is the table value where we enter the data. Then 4B is reversal on account of rule 42-43 and other reversal. 4D is ineligible credits. 4A is eligible and 4B is reversal of eligible. 4D is your ineligible credits. Now, how do I reconcile? The first 3A1 import of goods. The credit which is there on import of goods should match with your ICE gate portal. When you are importing the duty, when you are importing and paying the duty, you are disclosing your GSTN and paying. If you are taking credit in your 3B, necessarily I should find an entry for that in my ICE gate portal. If I am not finding it, then again as a GST auditor I would disallow that credit, stating that you have taken a credit where you have technically not imported the goods. Maybe someone else would have imported the goods, you have purchased the goods from them, that you might have considered as your import of goods. Unless you reconcile with your import of goods duty paid with the ICE gate portal, that credit is not eligible for you. Next, import of services. Import of services and inward supply reverse charge. These both you have voluntarily offered it as a tax and you have taken credit. Where did you offer it as a tax? In your table 3. In your table 3D, you have to pay taxes for your reverse charge supplies. So you have paid tax. So summation of these two tables should match with whatever the tax you have paid in your table 4. So again, month on month basis you should do that exercise whether that is matching it or not. Then ISD. ISD credits would be available in part B of GSTR 2A. So you have to extract GSTR 2A part B. Thankfully now 2A can be downloaded in Excel. You only just go part B of 2A and see whether it is matching with my ISD credits of whatever the credits which I have taken in table 4A4. Then 4A5, all other credits plus 4D, all ineligible credit should match with whatever the entries which are there in GSTR 2A part A. The first part of GSTR 2A talks about all other credits. You have to do this reconciliation at an invoice level. If not at an invoice level, at least at a just-in level. Maybe differences can happen in a period. On a larger scale, it should match. Supplier has filed in April, you have accounted in May. There could be again timing differences. But on a larger scale, is that matching or not is what you have to see at a just-in level. And if you are able, if you are good in Excel, you can do it at invoice level. But you should do this matching. When you do this matching, you would have interesting information that would come out, which is missed out credits. Let me, any idea which are, where all you will find the missed out credits? Give me some examples. Bank charges.
Bank charges, insurance charges, telephone bills.
Insurance, telephone, freight.
Airlines ticket.
Very interesting point, airlines. Whenever you buy a ticket from a travel agent will give you bill. It will have the ticket value, its commission and GST. You wouldn't know how much airline has given the credit. On the basic where 5% of it, airline would have paid taxes to you. So those credits, all those would be appearing. So there are a lot of items you will discover that you have not taken credit. Second discovery would happen. Some credits are appearing in GSTR 2A, some lines are appearing. You would say that I don't even know who this guy is. It could be an error from that side, or your marketing guy, admin guy would have made a procurement. They wouldn't have given the bill to you because they are still negotiating. 6 months over, they are still negotiating, okay, at what price I will pay. And as an accountant, you will say, I will only record only when the bill comes to me. So for closing your books of accounts for the income tax purpose or the finalization tax or the statutory audit purpose, this acts like if there are any missed out expenditures to be recorded, you can also record it. That's the second advantage. The third advantage is looking at an ineligible credit. 2A comes with the vendor name, the trade name. You can change it back to your name and actually apply what is the expenditure you have recorded in your books. So I can convert my 2A into my P&L debit. Then I can quickly know what are the credits which are not eligible for, like food expenditure or rent-a-car services or the insurance, all the 17(5) related expenditure. Then I would find, okay, there are some items which are there in the balance sheet. Then I will map it to balance sheet heads. Architect fees, which is capitalized to the building, I am not eligible. 17(5)(d). So all those things, you will realize that you are taking credits which you are not eligible for. So when you do this reconciliation of 4A 5 plus 4D compared with your GSTR part, the 2A part A, you will discover all your accounting mistakes. Now, as a GST auditor, I am not going to do any of this reconciliation. I am only asking, I would ask, okay, give me this, give me this, give me this. If it is available, reconciliation is available, well and good. Not available, qualify stating that it is not matching, or impact is huge. And whenever an audit report goes with a qualification, otherwise also department is so enthusiastic. In fact, they are like your friends. They send love letters over Gmail. Like as we send write to our friends, then notice comes in the Gmail. Immediately notice would come. In fact, system would be, everything is automated. So system antenna would raise wherever audit reports are negative. Okay, send out one invoice, notice. Send either ASMT 10 or 3A, just send it. Let's first send the notice, later we will see. So you will be inviting all the notices. But if it is not matching, as an auditor, my duty is to qualify. I would definitely qualify. Report that, okay, to the extent wherever the data is not reconciling, I would definitely qualify. So preempt the clients, or if you are doing an audit, if you are a client and someone is doing an audit, keep these reconciliations ready and show this. There are differences, nothing worry, don't get scared. Turnover of my books is 100 crores, but GST I have shown 50 crores, don't worry, difference 50 crores is here. So that's how you should be ready with. Some checks and balances. Debit notes raised to the suppliers. There should be a provision in the books, maybe you should check. Not all debit notes or credit notes are according to section 34, you should check that. Whenever there are a provision which is made, if there are write-off against the provision, you should see whether 17(5)(h) is attracting and some input tax credit reversal would happen. You should be watchful of all those things. Reconciliations should always be made between books and the departmental, like the bank reconciliation which we are doing. Wherever you, after doing your 2-year reconciliation and you are finding differences, you can park the difference into 3 sections. One, either take it from your input tax credit ledger and park it for future reconciliation. Again, suspense input or some other ledger, you can explain to the auditor these are the difference. Second, debit to the party. In your next supplies, you can adjust so much amount from the supplier and say since the credit is not available, reverse your input tax credit and debit the party. Third, debit it to the back to the P&L. You know that the vendor is not traceable. You cannot recover this input tax credit. It is an expenditure. You have to debit it to the P&L. End of the day, my balance sheet can carry the input tax credit asset only which I am eligible for, which I am valid to take. Please ensure all indirect taxes payments are happened on time, because in your GST audit, we also have to report the tax payable by period, by month period, and whether the tax payables have been changed from one period to other period, and if there is any interest liability is arising. So that is also an ask from the GST auditor to report on additional interest one needs to pay. Reverse charge credits, please please educate the customers, clients, or if you are in the industry, please look at 30th September is the cut-off date. After 30th September, you are missing a lot. Outward supplies cannot be reported, inward sub credits cannot be taken. And especially if you have a reverse charge payment, which after transfer pricing audit only you are arising out of it, then you are actually missing the bus. If you have liability which needs to be paid on a reverse charge after 30th September, you cannot take the credit, because any transaction after 30th September in the 20th October return, you have to necessarily take the credit. You cannot take it at a later point. Check whether the filing of the returns have been filed within the due date. If the filings are not done within the due date, you have to report for interest or late fees which needs to be paid. Are we paying late fee in all the cases? Are we paying? It's auto-populated.
GSTR1 no.
Exactly. You are only paying for GSTR1, GSTR3B. You are not paying for GSTR1. Is there a liability for GSTR1 late filing? Exempt. Oh, sorry, saying exempt. I would be grateful. Now, as a GST auditor, you have to say the number of days GSTR1 late fee filed, penalty to be paid, and you have to report in your audit report so much additional penalty to be paid. So, hopefully, I am hoping government has taken this and they would want to relax GSTR1 up to September only for the interest portion, so that this confusion do not happen, because it is not auto-populating in 3B also. So if the liability is called for, earlier the late fee was 100 rupees per day per act. Now it is become 25 rupees per day per act. But 50 rupees per day has to be paid, subject to 5,000 rupees. So that's the cap. So if that relaxation do not come till you do the audit, in your audit report you have to report how much late fee has to be paid. In fact, for the government, GST audit is more like a revenue earning mechanism. So also in the GST audit, there would be a procedural reporting of the goods sent to the job worker or delivery challenge made within, which are not concluded within time, like 31/7 sale or approval basis. All those things would be coming out for your reporting. Now broadly, these are the reconciliations one have to undergo and carry on in GST returns. Is this reconciliation overwhelming you? Do you have a choice? Answer is no. You may say that, should I conduct business? Should I file the returns? Should I do accounting? Should I do this reconciliation? If you record your accounting entries in a methodological way, if you use the external tools, reconciliation tools, trust me, none of these reconciliations are challenged. In fact, in our office, we file more than 150 returns. Every month we ensure that there is a compliance report is generated for each return which is filled and filed, which is reconciling what is the turnover which is there in the books, what is the turnover which is reported, what is the tax closing balance which is there in the books, what is the electronic tax ledger balance, how much is the turnover which is the difference which has been reported in subsequent period. Whatever the reconciliations which you are seeing, all those reconciliations are reported on a monthly basis. Now for the client, there are difference, he is aware of difference. Even if by mistake, if any of my staff who has filed ignored in reporting some data, I am aware that there is so much difference, at least so much to be corrected in the next month. I am not waiting till the department issues a notice or complete annual return. You would find a way of reconciling. I am not sure how many of you are aware of Circular 26. I will quickly explain. I have another couple of minutes before we take the tea break. So I will quickly explain Circular 26, where it says errors in GSTR1 and 3B to be corrected in GSTR1 and 3B only. How do I correct? What are the errors? Errors could be of three types. I have over-reported my liability or turnover, under-reported my liability or turnover, or cross-reported. Similarly, input tax credit, over-availed, short-availed, wrongly availed. Coming to my turnover, in GSTR1, If you have missed out reporting your turnover, report it in your natural head. Table 4, 5, 6, you have natural tables to report. Missed out turnover, report it. Please note that reporting cannot happen after 30th September written. Like 30th September GSTR 1 will accommodate all the prior period entries. If you read 37 subsection 3 proviso, it stops the after 30th September all the prior period transactions. So it said if you have missed out reporting any turnover, please report it. If you have reported a turnover which is over-reported or erroneously reported, then you have table 9 and table 10. Go to those tables and rectify it. Instead of making a turnover, I made a turnover to sir and shown it as a sale to madam in my returns. I go to table 9, take this invoice, remove that GST and add this GST, and the provision is there. So it said use that feature. When it comes to 3B, if you have reported turnover of 10 crores, you have reported 8 crores. Next month, please add this 2 crores, pay taxes accordingly and report it. If you have reported a turnover of 10 crores as against 8 crores, the excess 2 crores come to the next month, reduce it in the 3B and report it. So that's how you would be reducing or adjusting in your 3B. In case if your next month you do not have a turnover to adjust this 2 crores, carry forward to the subsequent period and adjust it. But you may say that my accountant, instead of entering 1 lakh, the dot is omitted, it became 1 crore. I will never achieve in my lifetime to achieve this. So the department said, don't worry, if you have paid taxes on account of that, you have a manual refund application, you can make a refund of it. If you realize, if you think that it cannot be recovered, again Circular 26 has given a direction to process the refund. When it comes to the input tax credit, in table 4 you are taking the credit. If you have taken more credit in your table 4, you can reverse it in your table 4B of the next month. If you have not taken the credit in table 4A, add it as a credit in your next month. So the circular beautifully explains various scenarios. If you read, it is more like a self-explanatory. You can correct it.
So if it is a B2B supplies wrongly taken in the B2C, can we rectify that?
So I made a B2B turnover wrongly reported in my B2C turnover. Now please note, there is an FAQs which was issued in the banking sector where they said a B2C cannot be made as B2B. Meaning, I have issued an invoice as a B2C, I cannot correct it as a B2B. But I have issued a B2B invoice, but I did not know how to report it. I reported everything in B2C. All that you can do is go to the B2C table because it is an error apparent which you have made. Reduce the turnover in B2C. In table 10, you reduce the turnover of B2C. Go to table 4, enter the entry and report the B2B turnover. It is, system will accept it and you can do it.
Banks are not accepting this point.
Pardon me, sir?
Banks are not accepting this point.
Yeah. So the question is, banks are not accepting this point because bank has already issued an invoice as B2C and recorded it. After issuing the invoice, I cannot correct it. At least prospectively, you can submit the gesting to the bank and you can take that as a B2B credit.
So what invoice I get? Especially in case of ISD credits, it will not be available unless we enter the invoice.
Sir, ISD is in your hand. ISD is from one account to another account. It's like moving balance from one current account to another current account of mine.
No, it's not like that. See, my input service distribution sender should get the invoice.
So the ISD should have got the credit, they did not get the credit. So you are actually safe. You need not distribute anything.
Credit is lost.
Huh?
Credit is lost.
A credit is lost. If you have not given your GST to your vendor and vendor has reported as B2C, your credit is lost. You should be careful. Buyer behavior. If it was customer, it was king. But now buyer behavior. Sir, you have a question.
Sir, you explained that interest on fixed deposit has to be shown as an exempt.
Correct.
Will it warrant for reversal of the input tax credit because it is an exempt income?
Yes. So very good question. Interest on fixed deposit is an exempt income. So I have my common credits. I should definitely apportion my common credits to the taxable and exempt. So ideally answer is yes. But knowing that FD interest would be there and everything, government gave that relaxation. So if you go to the explanation to Rule 43, they have excluded this exempt interest income which is earned for the purpose of calculating the exempted turnover.
only for persons other than paying bank fees.
No, it is applicable to everyone. Banking will anyhow earn. So interest is earned other than banking. So they are given to everyone.
Sorry, explanation to?
Rule 43.
Non-filing of ITR 04,
ITC 04 non-filing, there is no late fee, but at least now procedurally there is a general penalty. Section 122 is one thing like how we read 7, 8, 9. 122 is also something one has to read. The penalty section, where all penalties can be levied. 122, 73, 74, all those penalties, offences, we should be little bit aware of it. So any violation under the Act, the minimum penalty is like the basic entry fees is 10,000 rupees.
Not in course of business. What's the example?
Receipt not in the course of business. See, okay, see, it applies industry to industry. Now, I have received some donations. Okay, it might not be covered under the exemption section. Section 12, if I have to ensure that okay, these donations are not taxable. Like this Kerala Victim Fund relief is going on. So what I will do, I will call from my employee saying that okay, you also donate. Now instead of donating there, I will create my bank account. I have collected the money.
Practical activity is not possible. Who will the employee give you employee?
Sir, there are many software companies. They have recovered money from. I am saying there will be chances. It's like, sir, today businesses, anything would be possible. It's just that we be careful that if it is a receipt which is not in your regular course of business and you thought GST is not applicable, you have not discharged GST. And in fact, there is a recent Supreme Court ruling which says if you are applying any exemption, you should strictly fulfill the conditions of the exemption. So it's like I have received these donations. I was thinking that okay, it is exempted since I have applied for the charitable purpose. So you have to really see that these donations which you have collected are for charitable purposes and it is exempted from GST. Otherwise it has to be taxable. And I wouldn't even route this to my P&L account. I park it into my balance sheet current liability account, I pay it off, I will offset then and there. If I am adding something more, I would debit to my P&L as a donation only to the differential amount. So that is why I am saying we should be aware of this netting of entries. Like subsidy received. Other than any subsidy which is received from the government is again has to be added for the purpose of valuation, section 15. Some subsidy, like I am doing some activity, is like say I am doing some social related activity and government is giving a subsidy to set up some factory and pass on a credit to the customer by way of the discount. That subsidy I can reduce it a value. But on a mutual benefits, I am getting a subsidy from someone and to reduce the value and make a sale to the customer, those subsidies I cannot reduce from my sale. But those subsidy I might also not disclose as an income in my P&L, I would have directly taken it to the capital. So I am only saying that please be aware of these transactions which are not routed through P&L. That's what I am saying. This subsidy which is received other than government, you have capitalized, this is taxable for the purpose of section 15. For the purpose of section 15 valuation, any subsidy received other than government is taxable. So there would be transactions like that.
So this correction you explained as per circular 26.
Yes, sir.
3B, entailing payment of a tax or reversing the credit wrongly availed, we have to do with the interest.
Yes, any corrections which I am doing in 3B, it will not auto-populate the interest. I have not reported turnover for 9 months. Now I am reporting in the month of April. Obviously, I will pay it along with the interest. Yes, sir.
You are clarifying about that amount collected from employees and sending the Kerala fund.
I will take it offline. I will not talk about some difference of opinion related issues. It can become it is an exempted turnover, but it can also take characteristic of taxable turnover also. Okay. So, with this, I come to the last point of my discussion. I know I have disturbed your sleep with showing so many reconciliations you should do. But I would end up with a good note. The conclusion is, difference between the numbers is normal. In fact, more than normal, I would say it is obvious the differences would be there. If the difference is explainable between 100 crores in IT returns, 50 crores in GST returns, 50% of the turnover is missed. If the difference is explainable, nothing is abnormal. You will have a problem if the divergence are not explainable. It's only when you cannot explain the divergence, you will have a problem. So the only mantra to address notices is reconciliation. So mantra of successful journey in return filings and your GST audits is reconciliation, reconciliation and reconciliation. So with this, I thank everyone for your patience.
Venugopal Hetu Karmanyevadikaratte ma phaleshu kadachana. Reconciliation, reconciliation, reconciliation. ಅಷ್ಟು ಮಾಡಿದ್ರೆ ಸಾಕು, ನಮಗೆ ಏನು ಮಾಡ್ತೀವ ಕರ್ಮ ಅದಕ್ಕೆ ಫಲ ಬೇಕಾಗಿದ್ದು ಸಿಗ್ತದೆ, ಯೋಚಿಸಬೇಕಾಗಿಲ್ಲ ಅಂತ. ವೇಣುಗೋಪಾಲ್ ಅವರಿಗೆ ತುಂಬ ಧನ್ಯವಾದಗಳು. ಮಧ್ಯಾಹ್ನ ಮೇಲಿನ ಈ ಸೆಷನನ್ನು, ಗಂಭೀರವಾದಂತಹ ಸೆಷನನ್ನು ಸರಳವಾಗಿ, ಸುಂದರವಾಗಿ, ನಿರರ್ಗಳವಾಗಿ ನಿಮ್ಮ ವಾಗ್ವೈಖರಿಯ ಮುಖಾಂತರವಾಗಿ ನಿರ್ವಹಿಸಿದ್ದೀರಿ. ಹಾಗಾಗಿ ನಮಗೆಲ್ಲರಿಗೂ ತುಂಬ ಸಂತೋಷ ಆಗಿದೆ. ಜೋರಾಗಿ ಚಪ್ಪಾಳೆ ಅಂತ. ಬೆಳಗ್ಗೆಯಿಂದ ಇಲ್ಲಿಯವರೆಗೆ 3 ಒಂದಾದ ಮೇಲೊಂದು ಉದ್ದುದ್ದ ಸೆಷನ್ಗಳನ್ನು ಕೇಳಿದ್ದಾಗಿದೆ. ಈಗ 3 ಜನರನ್ನು ಒಟ್ಟಿಗೆ ಕೂರಿಸಿಕೊಂಡು ಮಾತಾಡಿದ್ರೆ ಏನು ಹೇಳ್ತಾರೆ ಅನ್ನೋದನ್ನ ಕೇಳೋದಕ್ಕಿಂತ ಮೊದಲು ಒಂದು ಟೀ ಬೇಕು. ಇನ್ನೊಂದು 15 ನಿಮಿಷದ ನಂತರ ಮುಂದಿನ ಕಾರ್ಯಕ್ರಮ ಪ್ರಾರಂಭ ಆಗ್ತದೆ. ಟೀ ಕುಡಿದು ಪ್ರಾರಂಭ.